Ladies and gentlemen, welcome back to the channel. I wish we had better news to go over, but the stock market is now officially crashing. Not just small caps and hyper growth stocks, your recession trade, it's hitting everything now. And why is that happening? Number one, we'll talk about the Fed is compromised. I know, it's unfortunate. The Fed is compromised. And we'll talk about what that means and what the next step is from here. But it's a difficult situation when the Fed is compromised, and that's the catalyst driving this market. So we have a lot of work to get into. Hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come trade with us. But let's get started. And the biggest thing hurting markets today, what I seen all day today, what at least on CNBC, it was the Fed. Okay, the Fed has completely lost touch with reality of this economy, and that's a scary thing for investors. Okay, we're talking Fed Hammock, Fed Kashkari, Fed Musa, all of them today said some things that are going to shock you. I mean, just simply put, we haven't seen tariff inflation. It just really hasn't shown up in the way that people thought. But the Fed says the economy's in a great place, labor market's in a great place. There's some weakness, but they're not worried about it. They're worried about inflation. That's what they said today. Okay. And Wall Street's like, hello, negative 60,000 jobs was the estimate for jobs on Friday. You're worried about inflation? You're not trying to prevent a further crash in the labor market? What's going on here? Okay, Wall Street is literally telling you that the Fed has lost reality of the situation with the kind of selling that we had today. It's pretty obvious. Now, we'll get into specific headlines in just a moment, but if you look at the Fed Rate Monitor tool, the current probabilities actually favor a pause for December. A pause in December is at about 54.6% probability. The chance of a rate cut at 45.4%. Well, I don't think rate cuts do too much to the economy these days. It's not a good sign that you have the Fed this dislocated from what's happening in the economy. This is like 2022 in reverse, right? And it's a really rough situation for the markets to wrap their heads around, because with the Fed being disconnected from reality, factually put, that's a fact at this point. They're quote unquote fighting inflation that really hasn't shown up, but we're apparently hemorrhaging jobs last month, 60,000 negative jobs, and they just don't care. That's raising recession concerns that the Fed is going to be late, and that's why risk assets today got absolutely smacked in the face. Now, good news is, I guess, if you want to extrapolate something, you're getting better deals on the stocks that you liked, okay? If a stock that you like has had zero news and it's just sold off because of the broader markets, I would view that as a buying opportunity. Also, a little bit of good news is, I think the odds are good that the economy is okay, right? As the economy is okay over time, as we see that, it's likely going to set up a reversal to the upside, right? It's likely going to set up a rally to the upside. But the question is, how much fear and recession concern gets injected into this market? And today did seem like quite a bit of a tipping point for this market. Now, it doesn't help that today the top trunk economic advisor, Kevin Hassett, says the shutdown cost 60,000 jobs and $92 billion and will be a 1.5% GDP hit. Kevin Hassett, National Economic Council director, says the shutdown caused about 60,000 non-federal job losses, cost the economy $15 billion per week and around $92 billion total, and may cut Q4 GDP by 1.4 points. So you're hearing some of these numbers, right? And the Fed is like, things are fine in the economy. Like, go to sleep, relax, markets. We're worried about inflation. And Wall Street's like, we're not worried about inflation at all. We're worried about the economy. Very weird situation. The Fed has completely lost touch with reality. They are compromised, as the easiest way to put it, probably because of politics, because of political things. There's no justifiable way to explain this, okay, besides some kind of political vendetta against Trump or something like that, because it makes absolutely no sense, and that's why markets are crashing. And you heard from a lot of Fed speakers today, individual guys. Again, we'll look at the headlines in just a second, and it just doesn't make any sense. Okay. Again, you can see the Russell 2000 down 2.77%. The VIX up 14.22%. NASDAQ down about 2.3%. Dow and S&P down about 1.65%. Both of those indexes. If you look at the CNN Fear and Greed Index, you could see you're coming in extreme fear at 24. Market momentum is fear. Stock price strength, extreme fear. Stock price breadth has just been bad for a long time. It started with small caps and it is now leading into the broader indexes, but that's an extreme fear and really just trending lower. Put in call options, extreme fear. Market volatility is neutral. Safe haven demand is fear, and junk bond demand currently in extreme fear. We should have got a new AI investor sentiment survey today. Yeah, look at that. You are now sitting at 31.6% of investors that are bullish, 19.2% that are neutral, and 49.1% that are bearish. Sheesh, that's getting up there. And again, it's logical. It makes sense when the Fed is compromised. That typically does not lead to great outcomes in the economy or to the markets. Okay. And it is a problem. Now, the percent of stocks above their 50-day moving average now sitting at 39.5%, down about 12% today. So you're heading to the lower end range. And I mean, what stops this? You know, that's a difficult thing right now. The markets didn't care about the government reopening. The markets didn't care about Trump lowering tariffs on China. The markets only seem to care that the Fed is compromised. And literally they're focused on nothing else. Even though whether we get a rate cut or not, probably does not change much for the economy. Now, it also does not help that the administration in the White House says that we're probably never going to get the October CPI and jobs report. And while maybe there's a logical, justifiable reason for that, maybe they just were not able to get the data. That makes sense if people are not working or, things like that. But it sounds like it was so bad they just don't want to release it, right? That's what it sounds like. And, that news came out yesterday and now we are crashing today. I would definitely say that is adding to the fear in this market. Oh, and officials have presented Trump with military options for Venezuela. So add that to the list. Verizon today says that they will cut about 15,000 jobs, which adds to many other companies saying similar things. Now, let's get into some of these Fed comments. The biggest driver of the day for markets, moving those probabilities for a December cut to less than probable. So that's a big problem. Like, Fed is compromised. Okay. Fed Kashkari says inflation is still too high at 3%. Fed Hammock says anecdotal data has been important during the government shutdown. Fed Hammock says inflation is still too high and moving up. And again, we're not getting the CPI numbers for October. So Wall Street's like, where are you getting that from? It just doesn't make any sense. Fed Hammock says, I hear from contacts that inflation is too high and moving in the wrong direction. Like somebody commented and said, source? Like, of course, people think inflation's too high. People don't understand that inflation is something that continues to rise. Not, if you're looking at 2021 and, or 2019 and comparing prices to today, of course you think inflation is too high. You're going to think inflation is too high long after inflation is at 2%. That's just how people operate and how most businesses operate. They don't understand that, inflation is the steady, cumulative rise in prices, not looking at 5 years ago's prices. Fed Hammock said Fed policy needs to remain somewhat restrictive to push inflation pressures down. Hammock says current unemployment is around the maximum level. Fed Hammock says the U.S. economy has been remarkably resilient. Like, are they talking about for 5 years now, or are they talking about the last 2 months? Because, if you're looking at the economy in aggregate over the years, it's been resilient. But if you're looking at the economy in the last 50 days, which should be the most relevant thing to look at, it doesn't look resilient by most of Wall Street's metrics. Fed Hammock says that he expects tariffs to drive up inflation into early next year. So basically what a lot of these Fed officials are saying is they think the economy is fine and they think inflation is the problem. But then we're seeing negative 60,000 jobs last month. We're seeing, companies firing people. We're seeing stocks getting crushed. And the markets versus the Fed are on two different playing fields. They're not even in the same ballpark, okay? We're so far apart on what the markets think, pricing in recession fears and a huge slump in the economy. And then the Fed's like, all things are fine. We're worried about inflation. They're compromised. Fed Hammock says the labor market appears broadly balanced. You just can't make this shit up. Fed Hammock says monetary policy is currently barely restrictive, if at all. I just don't know what these guys are looking at. Okay, we had real estate data today that helped cause this decline in markets. I should mention, okay, adding to the recession fears, that foreclosures are now hitting levels that are spooking some people. Now, although they're really low versus historical averages, only about 0.4% of all homes are in foreclosure. The average historically is between 1 and 1.5%. So you're still very low on a historical basis. But there was almost 37,000 U.S. properties with some type of foreclosure filing in October. That's a 19% jump from October 2024 and marked the 8th straight month of annual increases. So, it's one of those things where like the Fed is not paying attention at all. Now, at the peak of the Great Recession, more than 4% of mortgages were in foreclosure. Okay, today less than 0.5% are in foreclosure, well below the historical average of between 1 and 1.5%. So again, you don't have a massive problem at this point, but Wall Street's saying, hey, the trend does not look good. Then the Fed's over here like, we're not restrictive at all, but people are losing their homes. Like, can't make it up. Fed Hammock says, seems like the neutral rate has been rising in the recent past. Fed Hammock says it's not obvious that monetary policy should be doing more now. Like, we didn't have a 20% jump in foreclosures, or, some areas of this economy are really not doing well, or we just had, an expected negative 60,000 jobs report on Friday, but yeah, we shouldn't be doing anything. You can see why the markets are freaking out. It makes sense. Fed Hammock says, I expect above target inflation for 2 to 3 more years. Fed Musa says, I expect Q4 weakness with a rebound 10. I don't know what that means. Rebound 10 with next year at or above potential. So yeah, I think that's probably true. I think most of Wall Street is hopeful that's the case. But as the Fed is becoming more, compromised, as it looks like the economy is worsening, the spread is widening, and it's putting a lot of pressure on stocks in the near term, even if next year is going to be just fine, as I think it likely will be. And part of it is the Fed is just drawing these conclusions like they're ever correct. Fed Musa says, I expect the labor market to stay around full employment, likely to soften a little and get to 4.5% unemployment. These people, as Beachside Bag Holder says, these people are retarded, okay? They're throwing out numbers here, and they're thinking with absolute confidence that inflation is going to continue to rise. Like there's nothing to support this. These are all personal estimates, like personal claims, and they're making policy based on personal expectations and not what the data looks like. And that's spooking investors. And then you have Fed Kashkari. Let me just read you these 4 headlines really quick. He says, I have no strong inclination yet on a December rate cut. He says corporations are very optimistic about 2026. Fine, that's fair, whatever your opinion. He says, it seems like there are real pockets of weakness in the labor market. Uh-oh. Then Fed Kashkari says, the resilient economy called for a rate pause in October. I don't know if these guys even understand what they're saying. Okay. Kind of crazy. Kashkari says data suggests more of the same since the October meeting. 60,000 negative jobs. Wall Street's looking at a headline like that. Like, what are you talking about, Fed? Are you if everyone was smoking what the Fed is smoking, it would be a happy world. We just all would live in our little bubbles, right? It'd be harmonious. There'd never be a problem anywhere. But unfortunately, only the Fed's, smoking that. And everyone else is in reality like, what's going on here? And again, we were hopeful we would get CPI data this morning, initial jobless claims and all of that. Well, the BLS says it's going to take some time to get the data around and to get some dates set for things. Now, that's, what does that mean for tomorrow? Are we going to get PPI or retail sales or business inventories tomorrow? Are we going to have any new information on the economy and how the economy did during the shutdown? We don't know. That's uncertain at this point. Now, we did have some earnings today as well, most notably Walt Disney. There was some issues there. That stock sold off. You did have some earnings today in after hours as well. Red Cat, Applied Materials, New, Virgin Galactic. But honestly, these earnings just aren't going to matter for the broader markets like big tech was. And big tech was just fine, right? Big tech earnings beat and raised, pretty typical, earnings season thus far. And Wall Street is just so nervous about the Fed being compromised that literally nothing else matters at this point. Kind of like 2022. The only thing that mattered was the Fed. And we're getting back to that now, which is a dangerous place to be for stocks. So again, as we've talked about throughout this video, the Fed is compromised, okay? There's been a couple other instances where the Fed has been compromised on a short-term basis. Normally, the Fed course corrects when they realize that they are, coming across as dislocated, okay? You're at one of those moments right now, I would say. There's a lot of questionable things being said at the Fed, and unfortunately, there's not a whole lot of logical answers for them, okay? Well, what does this mean going ahead? This means some good, some bad things. Okay. You can make an argument that we're now no longer pricing in a rate cut for December. So maybe that's a good thing if the economy is okay, if the Fed is right. Or you can make the argument that there's upside to price in a rate cut again for September. But at this point, Wall Street is in full-blown panic mode. And I would expect some kind of language shift pretty soon from the Fed because of, again, how dislocated they are. Like, they have to understand how dislocated they are, right? From like, they're getting calls right now, I would imagine. Like, did you not hear that the jobs report was likely negative 60,000 jobs? How are you saying inflation's the problem and the job market's fine, right? That to me just doesn't make sense. And I don't know how long the Fed can keep on that road as stocks are declining like this. I do think it sets up an opportunity into, again, December. I thought November was going to be a good month. I think it should have been a good month. But, government shutdown, some things we just can't, we're retail investors. We have no control over what the government does, what the Fed does, just how we react to it. And I think at this point, if you're buying this market in certain areas, you're probably going to do very well. Now, I know a lot of retail has capitulated. They've long got out of this market, and that's unfortunate. I'm staying the course here and looking for opportunities, okay? And, hopefully we get some of those soon. So hit that like button as well as subscribe to the channel. Unfortunately, it doesn't look like we're going to get any economic data tomorrow either with, again, retail sales, business inventories, and PPI. If we do, that's great, but there's no indication right now from the government that we're going to get them. And, that just means the uncertainty lasts longer into next week. So we'll see. If you guys want to come join the trading community, check that link out down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.